These minutes may raise more questions about where the Fed was 3 weeks ago than they answer. While the decision to leave rates unchanged was unanimous, during the discussion, the committee was divided. Quote, some participants indicated that they favored raising the target range for the federal funds rate 25 basis points at this meeting, the minutes say, or that they could have supported such a proposal. Instead, there was a compromise. The minutes say almost all participants judged it appropriate or acceptable to maintain the target rate unchanged at that meeting. The idea, give them more time to assess where the economy was. Most of the participants agreed that while the labor market remained very tight, there were signs it was coming into better balance. And while inflation remained too high, the economy was slowing. Many felt that the economy still had yet to feel the impact of the cumulative tightening over the past year, and the impact of March's bank problems on credit availability was yet to be determined. At least at this meeting, quote, almost all participants noted that in their economic projections that they judged that additional increases in the federal funds rate during 2023 would be appropriate. Although their dot plot submission suggested 2 more moves, how much would depend on incoming data, a point the committee stressed. One other note, Fed staff continued to anticipate the economy would go into a mild recession later this year, followed by a moderate recovery. And also, members of the committee did discuss, although they reached no conclusions, on the impact Treasury bill selling after the deficit deal was reached would have an impact on interest rates on the short end.
And Mike, at the same time, looking through some of the details here, we see on our Top Live blog that Fed staff economists continue to forecast a, quote, mild recession starting later this year. That's at odds with what Jerome Powell himself has said.
That's what we have seen from the Fed staff for the past 3 or 4 meetings. Their models suggest that the economy should contract by the end of the year, but none of the members of the Open Market Committee seem to believe that, and certainly Jay Powell has argued against it, at least saying that he doesn't think it's likely.